Welcome, fellow investors. Today, we're going to dive into the world of investment and explore some key points to remember when starting your journey in shares, bonds, and derivatives. So, let's get started. First off, let's talk about bonds. If you're a conservative investor looking for a safe place to start, bonds are a great option. They also provide a way to add some debt exposure to your portfolio, helping insulate against extreme conditions in the equity and derivative markets. When it comes to bonds, remember that government bonds are generally safer than corporate bonds. Bonds are assigned ratings, so keep an eye out for AA or A+ ratings. These higher ratings offer decent returns while lowering the risk of default. Now, let's shift our focus to equity shares. Before jumping into the stock market, it's crucial to have a thorough understanding of the risk-return dynamics. Equity shares come in various categories based on market capitalization, which affects their potential returns and corresponding risk. If you prefer a relatively conservative approach, consider growth stocks and dividend yield stocks. They offer a balance between potential returns and stability. For beginners, an excellent way to gain exposure to equity shares is through mutual funds. These funds are professionally managed, providing good returns and optimal diversification. To reduce downside risk even further, you can use the systematic investment route. This strategy takes advantage of rupee cost averaging, smoothing out market fluctuations over time. Now, let's touch upon derivatives. These financial instruments are considered high risk and are best approached with caution. As a beginner, it's generally recommended to stay out of this arena until you have gained ample understanding of the derivative markets. Derivatives can be useful for hedging purposes, but it's crucial to closely monitor the market if you choose to venture into this territory. Lastly, remember that seeking the help of a professional can greatly assist you in navigating the investment landscape. Happy investing!